Hi, this is Dustin with Dustin's Dollars. Today I'm going to be talking about Richtech Robotics, stock ticker RR. Um, this was requested by a viewer. I believe it was by Wakaza, although I don't 100% remember. So I'm going to be talking through this company today, giving an overview of the company and the stock. And yeah, that's the topic for today. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I do not hold any position in this company today or in this stock. This video should be for your entertainment purposes only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. All right, so hi, Wakaza and Kevin. Looks like you're already on the stream. Thanks for hopping on. So I'm going to go through this company, and then if you guys have any questions or comments on going through it, feel free to leave them on there. And I'll talk about whatever topics we have, at the end of after I get through this material. If you want to talk about anything else, so for Richtech Robotics, you can kind of see here one of their products. This is, I think, the Adam robot, ADAM, and this robot is, or in general, a lot of the robots are focused on, they call it hospitality, right? Restaurants, hotels, that sort of an industry. I guess I can make this a little bigger, sorry. And as I said, this is the Atom robot. This is the one that they've sort of as their flagship product that they're trying to really promote at the moment. And it's able to make beverages, right? It's a barista, bartender, whatever you want to call it. Boba tea. Also, they have here. They have other robots. Here's another one called out. It's called Dusty, a mobile cleaning robot. And then they have some others that are sort of like delivery robots, Maitre d and Richie. They're delivery robots that are designed for restaurants and hotels, as they say here. And that is, they have a couple others that they've mentioned in their filings, but I think those are at least the flagship products that they have right now. They do call out a couple clients right here. And just looking through the company, there's a lot of statements in here about the long-term potential. So I mean, if I'm going to talk about the positives for this company, all positives and negatives, and go through some of the details after that. The positives for this company are obviously robotics is a very could be a very lucrative field, and it can scale very quickly. And for them, they have some initial products, and they've gained, I would call it, limited initial traction. I think somewhere in their filing, it does say that they have deployments in 37 states. I could probably, find that for you. And yeah, so they have deployments in 37 states, and they say they anticipate adding more on a monthly basis. And these are what the robots are that they have. These hospitality robots, and they estimate they're going to have 1,000 plus locations within 5 years. Now, of course, management estimates, especially for such an early company like this, are really have to go so far as what is your faith in management, and have they been right in the past. And I'm gonna maybe immediately shift to say one of the negatives for this company. One of the negatives I say for this company is it's fairly new. I think this company was founded in, I want to say it was 2016, but then they also have they have a slide here which talks about, hey, we were developing other stuff, but really if you read through their 10K, they weren't really focused. They were focused on building other things. They've tried out some other stuff. This is a lot of products for a company that's only 7 years, 8 years old to have come up with, in my opinion. And so to me, it really seems like they have a bit of a lack of focus. I think you see these are they going for deliveries? Are they going for robots? Are they going for hotels? I think they're still trying to figure that out. And they talk about having all these deployments, but the model that Richtech has in general is they sell these robots outright. So if you look in here, there's something that talks about 91%. Where's that? They split up their how much of the revenue came from sales versus leases. Maybe I could search for leases in here. Sorry, I didn't save the actual text for myself to look at this stuff. See if I can find it real quick. No, that's not getting it. But the majority of their revenue came from product sales. Let me. So I can't find it off real quick to prove it to you, but it's in there. It's in the filings, and I think calling a product that you sold calling it a deployment it's true, except having 37 deployments. I don't know that they're represent current deployments, or maybe those are 37 sales that they've made. Who knows how often these robots are running. Because they don't operate the robots themselves, they just sell them. It's really hard to say, and that kind of pulls in that revenue. They get the significant revenue from the product sale itself from the robot, but there's no ongoing revenue that they get from these. It didn't really call out a whole lot of service agreements, so that's one thing to note. Hey, Transient Stacker, thanks for hopping on the stream. And Walkaza says sales. They need to show sales. Yeah, and so I can go ahead and get into that, right? So let's look at in 2023. Go to their statements of operations. If I can type correctly. Yeah, so here we are. This is for the fiscal year ended 2023, and really this is it's the 12 months ended September 30th of 2023, because they must end their fiscal year at the end of September rather than the end of the calendar year. So they had roughly $8.8 million in sales, gross profit about $6 million. But if you look at this $8.8 million in sales for last year, average that out, that would be exactly 87.59 divided by 4. On average, let's call it $2.2 million per quarter. Look at Q1 here. Go back up to their statements of operations for Q1, and you can see that's the balance sheet. They were actually down. They were at half of that in Q1 of 2023. And now there might possibly be some seasonality to this, where folks spend less in the fourth quarter. It's possible, but that's a pretty big drop, right? So this puts them at an annual run rate that's like half of what they were in last year. Now, granted, it is, as I said, is up, year over year. So it's possible that there is some seasonality to their business, but we don't really see, as of right now from the data, because this is a fairly recently IPO'd company. I think they IPO'd last November. There's not a lot of 10Ks or 10Qs that have come out for the company. And as of right now, there's really no indication that sales are growing. This may have been like we've seen some other companies that have IPO'd basically at their peak, their peak revenue year, and then kind of went down from there. And they timed their IPO very well when the company did have its best year in history and was its best year that they management saw even in the future. I'm not saying that that's necessarily the case for Richtech Robotics, but we don't yet see anything that really shows this upward trajectory for the company. They had a $8.8 million last year, as I said, and now they're on the run rate of about half of that, given the most recent quarter that was released here. It was after that fiscal year. So that's a bit of a negative on the company, I would say, right? For something like robotics, and especially, I guess I can hop into it. I don't remember if they had a slide for these. Where they talked about their sort of master agreements. No, they must not. Sorry, because I read all this stuff, and I don't have it all in my head. I didn't take great notes here in terms of where all the material was at. But let me go down to these MSA agreements. Where's it at? They did talk about having these gaming. Yeah, the gaming MSA. So this is a section in their 10K. It's called material contracts. You should really read through this. This is kind of like the best concrete bit of future-looking sales that they talk about, and they talk about having some of these MSAs, these master service agreements, with specifically three large clients. The first one here says it was with a restaurant MSA. Let me find this exactly. Restaurant MSA. Yeah, so this one, they originally did a pilot, and this was it has a term of 2 years. Let me find maybe it's in the other one. Sorry, I know I'm jumping around. Nope, it was back here. This must have been what I was looking at. So it's with a large chain that has over 2,000 locations in the US. They have gotten some, a very, very limited order, right? So they had this agreement. They say, hey, it's with the large customer, but they don't really give any details on what these agreements really are, because at the same time that they say they have this agreement in place, they've only received, I think, $9,000 worth of revenue from that, and that was even in the quarter that was ended in at the end of 2022. So that's a very, very small portion. We had all of 2023 to really see for that client to see the results of that and to order more if they want it. Something that's has over 2,000 locations could clearly, forward. And if they wanted to roll this out, they would actually start their rollout before waiting a whole year, right? That's at least to 5 more stores, 10 more stores, right? They want to replicate their pilot, right? At that point, even 10 stores is a pilot on a restaurant that has over 2,000 locations. So I think the lack of progress that we see here, right, seeing only $9,000 in sales probably means that there's not a lot that's going to happen here. And again, this was a 2-year agreement. It started in September 2022. The fact that we haven't seen anything yet isn't definitive, right? Maybe they're waiting till the end of this agreement to make their orders, but seems unlikely. So that's kind of my take on this. Now, they had another one here, and this one is significant with a casino company. And, they, I don't know that they said exactly how large the casino is. They didn't disclose that as far as I could tell, but they did say that they recognized actually $344,000 in revenue under that. And there was some additional purchase orders, $127,000, or I guess rounded to 128, that they expected to recognize the revenue throughout the rest of 2023. So I think that is, significant, right? That is at least growing. It's continuing on. And they expect more to come in 2024. So that's at least one bright spot. If I was going to point to the most concrete bright spot for the company, this would be it, right? That they have an agreement with they call it a top casino company. Presumably they have, at least dozens of locations, or need for dozens of robots, let's say, and that they have actually, they're starting to get significant revenue, right? I would say your hundreds of $1,000s from one of these companies is, on the path to really growing. They had another one that they executed in January 2023 with, they call a major hotel brand with over 5,000 properties, but they haven't actually gotten any orders with this. So that's the interesting thing. There was some verbiage somewhere in here where they say they expect the hotel to make this a standard or something. Let me see if I could find that exactly. So I, can give you the... So our hotel enterprise customer is planning to make our robots a brand standard. This is the exact verbiage. A brand standard across all their hotels. Now, again, the fact that they haven't seen any orders from that agreement yet is a little suspect to me, right? If they actually got into that, let me go back to those hotel MSA. Is that going to... Yeah. So if they entered in this agreement in January of 2023, and, at least throughout 9 months, they didn't get a single order, right? They said we have not received any orders under the hotel MSA. And that was even as of the date of the report, not the reporting date, but the date of the report, which was filed, I think, in January. Oh, it's somewhere up here. I can't find it. There's too much words here, too much verbiage. I guess at least January 11th was when they filed this, and they hadn't yet gotten any orders from it. So it's really hard to take them at face value when they say that the hotel wants to make it a brand standard, but yet they haven't even deployed it to one of their 5,000 properties. So again, I am... This is one of the things, as I was reading through, makes me a bit skeptical of the statements that this company has made. I guess I can go back to the investor presentation, and they do have a map here where they say these are where some of our deployments are at. It gives you just a bit of an idea, and they really are, at least according to this map, in 37 states, I think it was. And they talk about they're expected to cover more than 200 cities and 50 states by the end of 2025. Again, do you believe management or not? A lot of things are going to come down to that. At an early company like this, it is going to come down to what is your trust in management. And again, some of the statements that I was seeing put me off from really wanting to do more research, and I'm probably not. Spoiler alert: I am not personally invested, and I do not intend to invest in this company, given what we've seen so far. I'll add it to my watch list of things that if they develop over time, they have an interesting business model. If they gain traction and have some sort of a defensible competitive advantage over other companies in the space, then I could be very interested, because I can see how there's a very, very long runway of growth, right? I think they have a slide that talks about their total addressable market, or might just be in the early slides here. Highly diversified, $230 billion addressable market. That I didn't do the math myself, but that makes sense, right? How many restaurants, hotels are there in just in the US, but I mean even more broadly than the US, that could benefit from robots that actually work and actually save them money? It makes total sense, but are they the company that's going to do it? That's a really big question mark for me. And there's even a section here that talks about their competition, and the competition, even if you just look through their so here's a whole section in their 10K just talking about competition, and they talk robot by robot for their most popular robots, or their flagship products, where they say here are already other companies that are doing very similar things. And they talk a little about some of the differentiators. They say, hey, the tray on our maitre d is 40% larger and we have one extra tray. But these are not, in my opinion, durable competitive advantages. So the competition, I think, here is fierce. And even as I did a couple other Google searches just real quick, search for robotic barista, robotic bartender, robotic cleaning robot, there are quite a bit of companies out there doing sorts of things. And I think it's really not clear. Like they don't make any attempt, as far as I can tell in any of their materials, to really explain why they have a competitive advantage. At least nothing sticks, nothing passes my my common sense filter for why this company, why Richtech Robotics has a competitive advantage over any of these other companies who are doing it. And that I think is a really big deal for me in this space, because competition, when it really comes down to it, when you're this small, other competition really just needs more money to outlast you before you can get to scale and really to profitability in order to just kill your company. And that, I think, is a really big risk for this company. Maybe I could go on to some of the financials here. And so this is their most recent 10Q. This is for the quarter ended December 31st, 2023. That's the most recent 10Q that we do have from them. Sorry. On the chat, Kaza says, neither am I invested in them until I see sales, and more sales. Yeah. And I think, if we did see sales continuing to grow and they really gain traction, that would be, as I said, I'm interested in the concept and in the business model, but it's just not clear. I don't see it right now with this company, right? It's not clear that they're the ones who are going to actually execute on that and, capture any meaningful portion of this $230 billion market, And I have to imagine that if some other company does start to capture that, there's going to be a little bit of an effect where it gains credibility, and then other companies who are looking at the same things would flock to that same brand as sort of the leader. It doesn't have to be that way. There could be multiple winners in this space, but I think people are going to have a natural hesitation to purchase a robot, because I imagine it's a non-trivial expense in terms of the capital they have to put down to actually buy the robot, get it installed, and then it's a big question mark in terms of how well is the robot going to perform, and how reliable is the robot going to be, what happens when there's an issue, and if this thing is down, how long does it take to get it fixed? Those are very, very real issues that robotics have, and you kind of build trust when you actually have a large company who's been deployed at other clients, which, again, until they really are at that point, that's going to be a huge sticking point for a lot of other folks. And, maybe I'm being a little bit too pessimistic. They do have these deployments, as I mentioned, across the United States. So maybe they do have some customers that are able to give them some pretty good feedback. And if you read their website, Richtech Robotics, let me find on their website, of course they do their best marketing here. I'll close that. And they have some quotes. If you just scroll on here, they do have some quotes from, where was I at? Maybe I thought it was on their main page. Maybe it's not. Well, my bad. Sorry. Somewhere on their website, they have quotes and they say, here's a client who said they saved them this amount, $37,000 a year from their one robot in terms of labor costs. Maybe it's on the individual robot. See our recent installations. Maybe that's it. Yeah, so here's some of the quotes. This is what I was looking for. The staff like it. It does really help because sometimes when they're busy, they're trying to get all the food out at one time. So the robot does help. There's a client that's from IHOP, right? So that's a name brand. They say a team of 2 robots from Richtech Robotics fills in for roughly 3 human workers. Again, I don't know this particular establishment, Wesley Enhanced Living, but maybe that's meaningful to somebody. I don't know this brand again. So I think some of these smaller brands is really hard to get the credibility behind it. I think that one from IHOP is probably your best there. But there's some other, as I mentioned, there was one that talked about how much money it saved them. I don't know where the quote is, but there is a kernel here, which is a good business plan, is a good business, or is a good product. Let's say not necessarily a good business plan or a business model. That's really the issue. But I do think the credibility issue is going to bite them until they really have some big name clients. So, yeah, a couple of things that I do want to call out right past the competition is there were some, I'm going to call them red flags, but a couple things when I read through the report that made me a little bit leery on this company. Let me look in particular. This was one that really makes me nervous when I see things like this. So between the CEO and the company, there were some interest-free and non-maturity loans made between each other. And that makes me very, very nervous. When you have this commingling of finances, they're saying, hey, well, we made, this person made loans to the company, or the company made loans to this executive. Those, I think the fact that they are disclosing it here means that it was something significant. And, it wasn't just, hey, I used a company credit card for this thing and had to pay it off. Like that's starts to be something that really kind of raises my skepticism level up another bit to say, why is this commingling of money happening? And so that was one thing that I would just call out. If you are interested in investing in this company, anyone viewing, I would dig into this and really understand what was going on here to convince myself that there was no, that there's no, I'm going to call it fraud, but no shenanigans going on here. One of the things that I would call out with this company in terms of, in my opinion, is a negative, and that is that their R&D, a majority of their R&D is outsourced. So this company does not actually develop the majority of the robots themselves, at least in terms of headcount. So if you look here, you can see they have 16 engineers outsourced to China through a third-party human resource company. And then if you scroll down, you can look and see their employee count. For the R&D, they have 24 total employees. Figure there's at least one manager in there, maybe 2. So out of these 24 employees, 16 are outsourced. And that, again, is telling you more than half of their R&D is not actually, full-time employees at the company itself. It's through some other third party. And, the fact they're in China doesn't really matter, but the fact that Richtech Robotics itself doesn't develop the robots is, I don't know, that makes me also very leery in terms of what capabilities do they have as a company? Are they going to be able to actually upgrade these robots, maintain them over time? Like, it just doesn't seem like a very good setup for the long term. That I think is, I'm not going to call it a red flag, but something that I personally would disqualify it for me as an investment, just because they're not much of a tech company. When they don't do the majority of the R&D themselves. So, and then real quick, going over the financials. This is again the quarter, the most recent quarter that was reported, the quarter that ended in the end of 2023. They ended with $7.5 million in cash. But every quarter you look at their net loss here, and they're burning. Again, just this isn't a cash flow number, but I could reconcile it to that. But they had a net loss of $2.7 million in the quarter. So just from the end of the year, they were looking at a run rate. This is post IPO. They IPO'd in this quarter. And you can even see it going to the statements of cash flow. You can see this proceeds from stockholder capital injection. That was their IPO, I'm pretty sure. And they got $9.2 million. And you see they raised $9.2 million, and then they ended that quarter with on their balance sheet 7.5. So that should tell you right there they're already burning it down, and because they're burning it down at $2.7 million per quarter, they've got less than 3 quarters worth of runway to go, and that's a pretty small amount after they literally just IPO'd. And again, really not a good look when their sales are down, at least on average versus the prior 12 months, average quarter. And so, financially speaking, they're just not in a very good state either. One thing that did jump out at me is, if this is to be believed that they had, $1.1 million in revenue for the quarter, they have, $3.1 million in accounts receivable. And so if you're not familiar, accounts receivable, to the best of my knowledge, is, money that is owed to the company. That seems like a lot of money for them to have, had purchase orders out and to be due to the company that they haven't yet collected on. That's a large number in relation to how much revenue they're actually getting, right? That's almost 3 quarters worth of revenue is, reflected in their accounts receivable. And they did actually drop this, or, they were able to collect on some of those accounts from, from the prior quarter, from 5.6 million down to 3.1. So that's actually a pretty significant drop, but it does make me it makes me worried about that. And yeah, Wakaza, I see your comment. I will talk about the NightScope 8K in a little bit, but I want to get through Richtech Robotics first for anybody who wants to stay on topic and understand that. But yes, your next comment of, I think RR have recently sold shares to gain more capital. You are correct, and so we don't know how many shares, but they got into this, and I have it open right here. I think the term might be like a synthetic ATM, a synthetic at the money offering, or at the market offering, sorry, where I think there's some, what do I say, regulations that post IPO companies can't file an at the money, or sorry, I keep saying at the money, at the market offering to just sell shares on the open market for a period of time, but they can do these other sort of backdoor things, and I've heard them called synthetic IPOs in the past, and they did go into one of these, right? So this is in mid-February. They made an agreement with this investor where the investor will agree to purchase up to $50 million of the company's shares of the Class B common stock. That's what is actually traded on the NASDAQ. They have the Class A and the Class B. I'll talk about that in just a minute. But the Class B is what is traded on NASDAQ. And so this investor will buy up to $50 million of the company's shares over the course of 24 months, right? So that's sort of the expiration date of this purchase agreement. And, but the price of the shares is 96% of the lowest volume weighted average price, right? The VWAP for the prior 3 trading days when the company says, hey, we want to sell you some shares, right? We want you to purchase some of the shares. And so they have actually been doing this. And as far as I can tell, this company, the investor, does not have any limitations on being able to then turn right around and the investor sell those shares on the open market. Maybe I'm wrong. I could have missed it somewhere in here. I certainly didn't read through all of the legalese, but I think that is the way these things usually work, is that the investor to which the company is selling the shares off the market is able to turn around and sell those shares on the market. And so because that investor gets, this discount, they get their shares at 96% of the lowest VWAP of the prior 3 trading days, they're basically buying these shares at a discount to what they are on the market. And then they can turn around and sell them at, on the market to presumably capture that spread. And so, yes, you're totally right that this is at least the mechanism by which they're selling shares. And we don't know how much they've been using this, but presumably they're using it a fair bit because, the company itself is burning cash like crazy, and they had, less than 9 months of runway at the end of the year. So that would mean from now they have like 4 to 5 months of runway, if they haven't sold any more shares. So I think it's very, very likely they are using this. They are selling a fair bit. And so, especially if you look, and I hadn't brought the chart up yet, but you look at this, the synthetic ATM was somewhere right around here, middle of February, when the stock was trading about, 192 per share. And, it's kind of gone this slow downward trend since then. And again, we don't know because there's, to my knowledge, there's no great source. I should say there's no real source at all that is up to date on how many shares are outstanding and those sorts of things for NASDAQ companies. But you can infer by the cash position of the company and their cash burn that they are actually continuing to sell shares. Wakaza says, I was hoping to invest in Richtech Robotics, but not in the state they are. It could have been my second emerging growth investment. Sad, but I'll keep watching them if they change for the better. Yeah, that's the bucket that I would put it in, right? Like, there's, if their products start to gain traction, they start to really gain on competitors, could be very, very interesting. But as of right now, I'm not seeing it. Real quick, so Kevin, I see, I think Tell may have earnings this week. Will you be covering in a video? Thank you. Yeah, when they report the 10Q, I will go over. I don't think that their earnings are really going to be that interesting, just to be honest. I think they would be reporting sometime, not necessarily this week. I mean, it's hard to say. The best place that I find is earnings Whisper. That's what it's called. So you go here. Sorry, I know this is a bit of a tangent from the Richtech Robotics, but it hopefully will only take a moment. So their best estimate is May 24th. So they tend to be fairly good about doing these things. But again, I have no idea. But when that gets reported, I will happily take a look at. I do think for Tellurian, the current operation of the company are not as interesting as asset sales, just to be frank, but we'll see how that unfolds. So one of the things I do want to mention for somebody who wants sort of the full due diligence on Richtech Robotics is they do have two share classes. Let me go back here. They have their Class A common stock and their Class B common stock. The Class A common stock, they had about 44.3 million shares outstanding, at least at the end of the year. And for Class B, they had I think the most recently reported number was 21.3 million shares. That was as of February 14th. So we don't know the impact of that synthetic ATM, this agreement that I talked about right here. And I think that was if I just scroll up here on the same in the 10Q, yeah, it was as of February 14th. There were 21.3 million shares of the company's Class B common stock outstanding, and the Class B shares are the shares that are actually traded on NASDAQ. The Class A shares are not traded on the NASDAQ as far as I can tell. And because those are the super voting shares, the Class A shares have 10 votes for every, and every Class B share has 1 vote. So the holders of the Class A shares control the company. They have a supermajority. In fact, I think the CEO holds, I think I could open this up. The CEO himself holds 30 million Class A shares, which I think gives him, so this is the CEO, Huang Zhenwu. That's my best attempt to pronounce it. I'm sure that's wrong, but he holds 30.3 million shares of the Class A common stock, and I think it's down here in the footnotes. This represents approximately 65.41% of the total voting power of all the common stock. This is immediately after doing the IPO, but because these Class A shares are have as I mentioned, 10 votes versus the 1 vote for every share of the Class B stock, they can continue to issue Class B stock for quite a while the CEO retains effectively full control of, full voting control of the company, right? He can retain that, 51%, 50.1%, frankly, control of the company for quite a while, even as they issue more Class B shares to fund the company. So that is definitely another risk with the company, because he can do, that gives him a lot of power to do things that may not be in the best interest of any other shareholder, and he legally has the power to to vote and do these changes. So that is it. Then now, the CEO, CFO, the CEO, they do hold a good chunks of shares in the company, Class A's mostly, but there is a lockup period for the company, so none of them have been able to sell it for 6 months after the IPO. I think it is 180 days, and if you look at that, it may even, it's even in one of the footnotes here. It's listed other places, where they've agreed not to sell, transfer, or dispose any of the common stock, for a period of 180 days from the effectiveness of the registration statement for the IPO, and so that puts it roughly to about mid-May. So it'll be interesting to see if some of these executives start to sell in the middle of May, once that lockup period ends. And that's something that if I were a current shareholder or we're looking at it, I would be interested in watching what their behavior is throughout the second half of May to see what are they going to do. So that, I think, is most of what I want to talk about. Again, there's there's a lot of negatives with the company. The positives obviously are, robots is, a very potentially scalable business model, and they do have some initial, they have made some sales, right? This is not a company that has zero revenue or totally trivial revenue. They have millions of dollars, but it's still small single digits, and it's not necessarily trending upwards in the direction you would want to see for this company. Now, I guess I didn't even talk about what the valuation of the company is, right? The market cap in this, I believe, is their this is all of their shares, their fully diluted share count is roughly about $82 million. We'll call it 83 million. And so $82 million or 83 on a company that has, again, it depends which sales number you go with. Do you go with the 8 point something million dollars that they had in the fiscal year, end of September of last year, or do you go with look at the most recent quarter that was $1.1 million in, for the last quarter in calendar year 2023? Those would give you wildly different price to sales numbers. They're clearly nowhere close to profitability, so it's really hard to really look at that. Again, I think the price of sales on this is, if we annualize the most recent quarter, $4.4 million, the price of sales almost at 20, it's probably like 18 or so. That's pretty steep, I think, for the company that has quite a bit of competition and some of the risks I called out here in the video. So personally, I am not investing, and it would take, a couple of quarters of some, positive news to really justify the current valuation, in my opinion. Not financial advice, but just kind of how I'm looking at it. And, if we saw the valuation continue to come down while the fundamentals actually improve, it could really be an interesting investment. So that's my general thoughts on it. If anybody else has questions or comments about that, feel free to leave them in the chat. I'm going to go back and respond. Well, Kaza asked about, another company, NightScope, that I talk about on my channel a fair bit. He said, can you give a quick summary on the recent 8K? And so I will do that right now. Let me go and pull that up. Go here. Of course, it doesn't like that I'm zoomed in. So let me pull that up real quick. NightScope and their most recent 8K. And so this one has to do with their the company being listed on the NASDAQ. Let me take off their interactivity, and here we go. So this was the most recent 8K. This was not a surprise, right? I talked about this actually in my most recent video on NightScope. They got the delisting notice or whatever the first thing is when the company loses compliance for being listed on the NASDAQ. And this is, hey, you've had a certain number of days closing. In this particular case, is their bid price being your stock that was trading on the NASDAQ closed below $1 for, I think, 10 days or 30 days or something. I don't remember the exact number. But at that point, NASDAQ sends them a letter and says, hey, you're not in compliance. You have 180 days to get back into compliance, right? And so it only takes I think it's 10 days closing at or above $1 per share, consecutive days, where then they say, cool, you're back in compliance. So basically they want the stocks trading on NASDAQ to be at least $1 per share. And if you aren't, they say, hey, you're not in compliance, go fix it. And NightScope has been, you pull up the chart. I guess I could use my my same Yahoo Finance tab here, and you look at NightScope, they have not been in compliance for a while, right? So if I go, whoops, did not mean to do that. Thank you for jumping around on me, Yahoo Finance. Go to the 1-year chart. They actually were out of compliance a while ago, and then the stock jumped up. They closed above $1 for more than 10 days, and so they regained compliance back in July of last year, June or July, somewhere in that vicinity. But then the stock has been trending downward since then, and so they've been under $1 for quite a while. They probably got the initial notice somewhere in, I guess, September or October, and I think it even says here, right, in October 26th, 2023. That is when they got this notice from NASDAQ that said, hey, you're no longer in compliance. Once again, please fix it. And as far as I can tell, then they had 180 days to do it. They have not regained compliance, right? The stock is still down below $1. And so this was NASDAQ saying, hey, we've determined you're not in compliance, so therefore you're going to get delisted. The NightScope, the company, so they are going to go back to NASDAQ and request a hearing. because, as I said, as it says in the 8K, NightScope is able to appeal and request a hearing to appeal to NASDAQ for them to say, hey, but we want to appeal your decision, and they're going to get that by May 1st. That's when that is when they're going to do that, and then they're hoping that NASDAQ grants them some other plan, right? So they the company intends to request a hearing before the panel, at which it will request a suspension of delisting pending its return to compliance. And so basically, I think they're going to get, they're going to try to get another 180 days to regain compliance. And this is what I talked about in my last video, where if you look at this and you say, NASDAQ, delisting, appeal, 180 day, granted, we can see companies have gotten this in the past. I think. So that's my read on this. Again, it is a risk. We don't know what's going to happen. The company is going to try to get this hearing before NASDAQ, and they are going to try to get more time. But again, worst case, they will do a reverse split of the stock. That would fix it right away. I even talked about it right in here, a reverse stock split. So, if they have to do that, they'll do a reverse stock split. That will mean, whatever shares you currently hold, you'll effectively hold the same portion of the company, but, the stock price will go back up because it will be less shares outstanding. They'll do a, 2 for 1 or 5 for 1 or 10 for 1, whatever they want to do to just get the stock price back up. It's kind of a lateral move for stockholders. I know it has a negative connotation. Lots of companies who do reverse stock splits are in a bad position. And to be frank, NightScope, as I've mentioned in the past, is not in a good position. There's a reason why the stock has trended down and down and down. And that, doing a reverse stock split isn't good or bad. It's just kind of changing the accounting on how large a share is, right? What percentage of the company that really represents. And so I think that's that might be an outcome of this, or they might get more time from NASDAQ to actually regain compliance. My most likely outcome, I think, is that NASDAQ will give them another 180 days. I don't know why NASDAQ loses really nothing to give them another half a year. And then, as they've granted these extensions to other companies. And then, maybe I'm wrong, maybe I'm missing something, but I don't know why NASDAQ wouldn't do that. At least give them a little more time before they send them to the OTC, because if they can regain compliance, then, NASDAQ retains a customer. And so I think it is to some degree in NASDAQ's best interest to give that to them. Now, we don't know what's actually going to happen. So it is a risk. Hopefully that gives you, what you were looking for here. I don't know if you're still here, Wakaza. That's my best read on it. But that's kind of the case. All right. That, I think, is everything I had to talk about today. I don't know if there's anything else anybody on the chat has to talk about. Questions or comments for anybody still watching, either live or after the fact. I will say I try to do my streams, on Sunday afternoon or evening, Eastern U.S. time. I'm totally open to, topic requests. This one today, Richtech Robotics, was a topic request, so that I'm proves that I will go over these. Sometimes it takes me a little time because when events happen on the companies that I'm personally very interested in, I want to cover those as close as I can, in a timely manner. But when I'm able to, I will go through other topics. All right, I do not see anything on the chat. I really appreciate it. I see there's a couple other folks here on the stream, so I don't know if there's anybody who has any, like I said, questions or comments. I'll hang out for just another minute just in case. But if everybody's just all done, and then happy to hop off too. I think I addressed everything in the chat so far. All right, I guess that's it. So I'm gonna hop off. Hopefully you enjoyed today's video about Richtech Robotics, and I will talk to y'all later. Have a good one.